actually up double digits from the previous record. And of course, that follows the CDC back on March 30th, so last week, lifting its guidance that cruises should be avoided. Basically, we are moving past the pandemic in many ways in the travel sector. So Carnival is up about 4% on the back of that, and some of its peers, competitors getting a lift as well. Norwegian and Royal Caribbean each up in the ballpark of 3%. Of course, I also want to check on the big mover of yesterday. That would be Twitter. It had its best day since 2013, up 27% on the news that Elon Musk had amassed a 9.2% passive stake in the company. We'll see how passive that really is, though, considering he already is advocating for an edit button on Twitter. One analyst over at Jefferies, though, publishing this morning saying that he thinks that the rally yesterday may have been overdone because it's unclear exactly what Elon Musk means to accomplish with that stake. Nonetheless, the gains are continuing for Twitter this morning, up 1.3% for that stock. Gains not continuing, though, for Tesla. Of course, it reported record deliveries for the first quarter over the weekend. The stock was up more than 5% on the back of that yesterday, giving some of that back, though, this morning, down about 0.7%. That is in electric vehicles. In electric air vehicles, Lilium is a stock I wanted to point to. It was up 25% yesterday, gaining another 10% in early hours this morning after the company said it is starting its another round of testing on one of its aircrafts in Spain, Tom.
Kaylee, thank you so much. Right now, the conversation of the day for people clipping coupons. Kathy Jones joined us, pianist and chief fixed income strategist at Charles Schwab. Kathy, I'm going to cut to the chase. The Bloomberg Corporate Total Return Index is down 8.6%, and I'm going to guess I've given up 2.5 years of coupon, enjoying the price decline in corporate bonds, and there's the full faith and credit story as well. The great dynamics here, and folks, this is Tuesday Dynamics on Bloomberg Surveillance with Kathy Jones. The great dynamic here, Kathy, is with the rising coupon, it's okay to step in and buy even with further price erosion, because now I've got a decent coupon. Are we there yet?
Yeah, I think we're getting there. So we have recently pivoted towards adding more duration to portfolios and to being pretty outspoken about income investors finding income and things like investment-grade corporate bonds, preferred securities, even high yield. If you're willing to take some of the risk, we prefer the upper end of high yield rather than the lower end. But all things considered, we think a lot's been priced in this market. And we do see growth slowing down in the second half of the year a bit. And we had a brutal first quarter, so in fixed income. So we think now's the time to step in and capture some of that income.
I mean, you're going to capture a coupon. What's a decent corporate coupon right now? What's the yield I can expect?
I think on the index, it's around 3.6 plus. So you can be in, in some, depending on where you want to be in investment grade, you can be 3.5 up to 4 perhaps. And, preferreds, you're looking at 5 or 6. So these are pretty decent if you expect, as we do, that inflation will trend lower later in the year. Those yields are going to look pretty attractive. I
mean, on a price basis, Lisa, I'm looking at a very famous American name with a 12-year piece of paper, a coupon of 1 3/8 is the yield, and you've enjoyed a price move from 116 down to 97. You've taken out 16% of price to enjoy your higher yield.
I love that you do your bond shopping online while we're talking
Pim
on
Fox
live
gave
television.
me his blue. I've got my blue S&P book from Pim Fox on my desk so I can look up my Boise Cascade bond.
Okay, well, I'll let you do that. But Kathy, I want to go back to what Frances Donald was saying, and you really touched on that you basically are in her camp, that you do think that inflation is going to roll over, that there is a transitory nature to this that was prolonged by the pandemic moving to the crisis, and that was really what was going on with the conflict-driven inflation that we're seeing. Do you also think the Fed will not be able to raise rates nearly as much as people are pricing in before they get concerned about growth concerns?
Yeah, we've been in that camp all along, or I guess I should say I've been in that camp all along. I'm not sure everybody on my team agrees with me, but I think that, the Fed now has to come out guns blazing, declaring that they're going to conquer inflation because that's their job. And I'm sure they mean it, But when push comes to shove, when we get to lower inflation and slower growth and rolling over in some of the sectors of the economy that are particularly interest rate sensitive, will they really be able to follow through on that? Will they actually need to follow through on that, or can they slow down the pace? Then you add in QT, which I think is being underestimated as a factor here. And you've got a lot of tightening in liquidity coming into the market just in the last couple of months and maybe over the course of the next couple of months. So we get to the end of the year, I think the picture's going to look a lot different, and the Fed will be able to slow down a bit.
Just quickly here, Kathy, we were talking to Frances about how she thinks we're getting close to the peak that we're going to see in 10-year yields. A pretty bold call when you've got the likes of Credit Suisse coming out on the opposite side, saying we could see 2.8% on the 10-year because of the same thing that you just mentioned, quantitative tightening. Where do you fall on this?
Yeah, I don't think quantitative tightening is negative for the long end. I don't see that supply weighing on the long end. Most of it's at the short end of the curve. They've got some MBS, and we don't know, what they're going to do with that yet. But that's probably a lot shorter duration than it looks like on the Fed balance sheet. So I don't see QT weighing so much on the long end of the curve. And if you go back to the last period of QT, we actually saw some curve flattening and yields fall. So I think QT is more of a liquidity drain, and that's a slowing growth story. And don't forget, we're getting tightening liquidity and higher rates globally, so that can compound it on top of the war situation where we really have a lot of uncertainty. So,
Kathy, you think that we've seen the peak so far in 10-year yields?
I think we're pretty close to it. So, where our call for this year was around 2.25 on the 10-year, ending 2.25 or so on the 10-year. So we think as rates move above that, towards 2.5 or above, we'll be extending duration.
Kathy Jones of Charles Schwab. Kathy, wonderful to catch up with you, as always. Lisa, we've got something really powerful in the works, a balance sheet unwind, and no one can agree on what it will do when it starts.
There isn't a lot of history here. I mean, even Fed officials have come out and said, we don't understand the reaction function as well of unwinding the balance sheet. We're going to read about what the details are, perhaps, in the minutes.
Tomorrow, Tom, in the minutes. What time, Lisa?
It's going to be 2 p.m.
Looking forward to that, Tom. Are you?
Yes, I am. I've got the alarm set. That Bill and I will look into that. I think I'm going to have an early beverage of my choice because I'm curtailing the surveillance nap. Because, well, I may have some beverages or several beverages. Usually I have a few.
We know that, Tom, on a daily basis every morning. Just getting a headline from Valdis Dombrovskis out of Europe, just more the same. We'll continue to ramp up sanctions on Russia. We've just got to that point now. I think a lot of people have.
Well,
when do they go there, Tom? On gas, on crude?
Maria Tadeo just putting out an internal note on the importance of the Austrian leadership going to Kyiv. I mean, John, this is hugely fluid, and let's just be clear here. It's just about atrocity, or as Mr. Putin would say, alleged atrocity. The allegedness is perhaps drifting away on this Tuesday.
There's some important meetings happening in the Ukrainian capital over the next week then, Lisa. We've got the Austrian delegation going. We've also got the European Commission as well. You've got von der Leyen going too.
When you go to a place that has been devastated based on these pictures, how do you then come back and say, well, we could do more, but let's wait and see? And I think the time frame is really the key aspect here. And this is why I wonder what the U.S. was doing with tightening the screws on Russian finances.
Should we catch up with a man who will actually read the Fed minutes? Tom Porcelli, joining us a little bit later, 8:30 Eastern, from RBC Capital, because I can guarantee you, I know a man who won't be reading the minutes. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. Ukraine's President Volodymyr Zelensky will address the United Nations Security Council today. The speech is scheduled to begin at 10 a.m. New York time. In his nightly video address Monday, Zelensky referred to the killings of civilians by Russian troops and said the death toll may be even higher. Bloomberg's learned that the Pentagon will be sending Ukraine new Switchblade drones armed with tank-busting warheads. That's in addition to less powerful versions of the unmanned aircraft. The weapons are part of a $300 million package of military assistance announced last week by the Defense Department. Twitter's largest shareholder says he will be a passive investor, but in the hours after Elon Musk announced he had taken a 9.2% stake in the company, some were skeptical. ARK Investment Management's founder, Cathie Wood, says Musk's investment may lead to another management change.
I will say this could be setting up for another leadership change. Twitter, you never know. And I'm not jumping to this conclusion automatically. I'm saying it's one of many possibilities. It'll either be Agarwal changing the policy of the company to, really open source the censorship or call people out on censorship, or it will be a management change. I don't know what's going to happen.
Twitter CEO Parag Agrawal replaced founder Jack Dorsey in November. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
The French president made very clear yesterday that he was open to extend sanctions to coal and oil. We will see what the position of the other member states will be, but I think that if there is a possibility to have unity on the 27 member states on these new sanctions.
Getting confirmation of that effort, that was Bruno Le Maire, the French finance minister, hearing from the Germans, a government official, that Germany considering the Russian coal embargo. Germany in discussion with the EU about the timing of the embargo. So that's the latest on that front. The latest on this market move, futures positive, negative rather, by 1/10% on the Nasdaq 100, down a little more than 1/10%, negative 0.15% lower. Yields are higher by 6 basis points, call it 7, 246.16 on a US 10-year. Some stunning pictures coming in from around the world on protests against higher prices, higher crude prices, fuel prices, fertilizer costs as well. These pictures coming in from Lima, Peru, Tom. The government, the Peruvian president, needed to impose a curfew in the capital, given some of the protests over the last couple of days.
Peru is absolutely original politics. The president is popular. He is a peasant. He is to the left, and he has become unpopular rapidly, John, over fertilizer and, of course, fuel costs.
Disruptions in Peru, Tom, and Peru won't be alone. We're going to see a lot of this around the world, unfortunately, for months to come.
Putting that together. Right now on this, and we want to devolve this into away from politics and right to the markets and the dynamics that we're going to see. Damien Sassauer with us, our Chief Emerging Markets Credit Strategist. Damien, I want to go to this strange word that we see in Peru, that we see in Indonesia, and that is controls. We're going to get controls, and out of controls, we get uncontrolled outcomes. In the financial space, what are the uncontrolled outcomes when we put in controls on fuel and things?
You forgot my last name there, Tom, for a minute there. I saw that. No, but listen, in Peru, it's very, you're right, it's unique because Pedro Castillo has just survived his second impeachment attempt, you know, since he's been in office. He had just raised the minimum wage. He had just put more fuel subsidies in place to help prevent what's going on in Peru. But in Lima, what you're seeing is protests against the spike in inflation.
What are we going to see in Moscow? If Putin has to put in controls on a depressive Russia, what does that look like for markets?
Monetary tightening across the whole of EMs on a collision course with a cost of living crisis. That's really where we are. And going back to Russia and what we've just seen overnight with the U.S. Treasury basically taking a hard line with Russia, saying you can no longer basically, you know, accept payments from U.S. banks. Look, they're preempting the May 25th decision. They are attempting to put this country into default. Clearly, the government is not happy that Russia's been paying on its debts. It's trying to create more crisis. It's trying to make it dip into its foreign reserves. We saw that Russia's foreign reserves declined by $40 billion to its lowest level in years just last month. So this is all kind of adding up. Look, they're trying to add as much pressure as possible. And Jonathan and you guys are all right. I mean, to focus on the energy exports and putting a block to that. But Tom, for me, it's got to be about China. I mean, the fact that Xi and Zelensky are finally going to be meeting after what's gone on, you know, outside of Kyiv. I mean, it's huge news. I mean, we need color on where China sits with all of this. They're going to be forced to pick a side in the not too distant future, in my mind.
In the stew of emerging markets, I want to go back to where we started here, because there is rising concern that the cost of food, the cost of energy, the cost of getting things from one place to another are absolutely skyrocketing, and that it's only going to get worse. What areas of the world are you watching for social unrest that could potentially bleed out over into the financial area, simply because that is the very blunt instrument that we use to try to measure things, even though we are very aware of the humanitarian issues on the other side?
60% of the countries that had appealed to the IMF's debt service suspension initiative post-pandemic are now at a high risk of distress, Lisa. So it's all out along the frontier. Everyone's feeling it there. Here's another stat. In the last 10 years, total external debt related to exports across the whole EM complex has doubled. So anything you're hearing about the fact that, you know, commodity prices going up are going to be good for certain emerging markets, and they very well may be, but by and large, the amount of debt outstanding across the whole of the emerging market landscape, and for that matter, developed markets as well, it's gotten excessive. And so I think, you know, when the water kind of rolls out, you see who's wearing their bathing suits, and I think we're in the, you know, we're pretty much there.
What's the historical analog for what we're going to see in the emerging market complex in the debt world over the next 6 to 12 months?
Oh, well, I mean, look, you know, you look to 1998, and look, let's be clear, you know, Russia going into default, I mean, if you look back to 1998, long-term capital management, no one knew they had that exposure to Russia. In fact, most of the losses at LTCM were due to bets they had made in the short end of the U.S. Treasury yield curve, right? But what happened was they pressed that bet, they got involved in Russian debt, and when Russia defaulted, that's when you found out who wasn't wearing their bathing suits, Lisa. So I think the real risk here in terms of a Russia default isn't so much that it's going to hurt the country, it's what's the ancillary exposure to other countries, other trading partners, and other creditors globally. You mentioned reserves. This is something I've always taken issue with, is the mystery of what's in a given country's piggy bank. Do we really know what Russia's reserves are made of? That's a good question. God, it's a good question. I mean, but what we do know is there's a lot of gold there. And the one thing I heard yesterday in terms of the sanctions— Is the gold fungible now? Can they move it? There's going to be a renewed focus on trying to prevent Russia from moving that gold. Now, you know that the U.S. government had some trouble doing that in Venezuela. Venezuela was able to sell their gold and generate income off the back of it. This time around, I'm not so sure. You hear about Glencore, you hear about some of the other commodity traders. They're really pulling back. You heard about JPM overnight, JP Morgan basically— On the nickel. On the nickel and across all of commodities. That wasn't in Diamond's letter. Did you read Diamond's letter? I didn't read the whole thing, but I got the gist of it. I mean, effectively, he's going to be chairman. He's not going to be CEO. I mean, what's that all about? No, I mean, I think gives him more time to watch Ted Lasso. Yeah, exactly. I think the funding is going to be an issue here. Commodities are very volatile. I don't think banks want to get behind it. I think that's going to create a lot of issues. Zoltan Pozsar, released a piece last night talking about all this. Credit Suisse, as we all know who Zoltan is. I mean, sometimes his conclusions are inaccurate, but his analysis is pretty in-depth. So I have to say, some of the things we're seeing in the commodity space have, could easily spill over into financial markets.
Should we throw in some sport, just because you've done everything else already? Do you want to talk about the basketball? Damien, what happened?
Danny Manning's miracles, huh? I mean, look, the reality is I didn't get to see the game because I fall asleep at 8:30 at night, Jonathan, but the reality is I heard it was an awesome game. I mean, NC was up 15 at the half, Kansas came back and won that game. I mean, what a win. I mean, look, McCormick, that power forward is an animal. He's a beast.
I know I've got an East Coast bias, but the scheduling of American sports I will never understand. Why was that played on a Monday night?
I think you have to give them a day's rest after the Saturday game.
Sure, give them a week's rest.
I mean, that's what they do in the Super Bowl, right? They used to be 2 weeks. If I had my druthers at ESPN or at Disney, sports scheduling, it needs to be changed. There needs to be a fix there. I agree with you.
It just doesn't make sense. You could have a run-up through the whole week, big drum beat, Saturday daytime game, Saturday evening, whatever you want.
Well, Tom and I were just saying, you get the ratings from the West, but in the East, guys like me who fall asleep with the TV on, you still get my ratings as well, even though I don't get to see the game.
There you go.
I think it's based on alcohol, beer commercials, and it's over. It's just done. It's dated.
Is this when the team cuts to the music? When Amy, no, I'm just kidding, I'm joking.
This is where Amy plays the music.
I did that to you when you talked about the
It's a small violin that starts playing.
I didn't like that.
John, I had a nightmare. Can you imagine a Damien cam?
We'll call it the Damo cam.
The Damo cam, I like that.
That'd work.
Start with a slide rule.
We can have everyone can select which camera they'd like. The Bramo cam, the Damo cam. Need someone a bit more bullish in the mix, Tom.
Yeah.
Take your pick. We'll get a picture of the trading floor at JP Morgan Investment Bank. Marco and the team. Marco Kalanovic and the team. Get a Marco cam. Futures negative a tenth on the S&P from New York. This is Bloomberg.
but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja, belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
We're living in a world of 6, 7, 8, almost 9% inflation.
The macro uncertainty is very high right now for the rest of the year.
It's too early to sound an alarm bell on a recession over the next year.
Earnings have simply gotten much harder to forecast.
The good thing for the economy and the good thing for corporations is that they're in such a good place to start.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz back in the house, and Tom Keene, radio and television, a Tuesday colored completely by the war in Ukraine. And John, the analysis back to, say, Thursday of is this NATO, is it Russia, or is it just a redux of Chechnya is front and center?
The sanctions front and center. TK, what can the Europeans agree on? Is it energy? Do they take a baby step towards doing something big? The proposal that we've seen, that we're reporting on, is a baby step towards doing something on coal, a phasing out of coal imports. TK, will that be enough to retain any credibility as Russia ramp things up?
Moments ago, Germany even mentioning the idea of sanctions on coal. John, all of it leading to reduced growth, and certainly the most controversial tweet of the investment morning and economic morning is Blanchflower really pushing against the certitude of ECB and indirectly Fed raising rates a lot.
Jamie Dimon at JP Morgan nailed it yesterday in his annual letter. Pity the Fed. His words, not mine. I've got no pity for the Fed. And a lot of people would suggest that maybe the Fed got themselves in that position. But let's take the essence of it, the spirit of that statement, Tom. The spirit of that statement is this Federal Reserve is in such a tricky position going into the back end of this year. And to repeat what Damien Sasser said on this program just 10 minutes ago, monetary tightening is on a collision course with a cost of living crisis. That, unfortunately, is true of too many countries right now.
We're going to talk to the equity outcome of this in a moment, but Lisa Bramowitz, before that is this cost of living crisis. And I'll tell you, anecdotally, day to day, every item, grocery store, fuel, and everything else, it's tangible.
Well, we can see that cost of living crisis bubbling over in places like Peru and even Sri Lanka. You're starting to see the tensions erupting in protests as people really push back. At what point does this become the shaping aspect of the next 6 months as we take a look at some of these frontier markets to take to sort of repeat what Damian Sassower was saying?
John, I want to do a vamp here and go to you on Boris Johnson. In the news flow this morning on these sanctions, on the outrage over these atrocities, I'm sort of surprised how the United Kingdom has been silent.
In what way, Tom? What would you like to hear from them?
I haven't seen the headlines coming out as what we've seen, folks, on the Bloomberg this morning is a substantial stream of headlines. And my answer is, where's the United Kingdom?
Well, I think the focus is very much on the Europeans, Tom, on the mainland, given their dependence on Russian gas. The likes of the Europeans and their dependence on Russian gas does not compare to the United Kingdom. That's why the focus is on them at the moment. And that has funded the war effort, Tom. That has funded the war effort over the last 6 weeks. And until the Europeans do something about it, they will continue to fund the war effort.
And of course, it comes back to gold. Lisa, you want to jump in?
Yeah, there actually were headlines talking about how the United Kingdom is exploring fracking. They're exploring other avenues of energy. So just to give you a sense, they are kind of coming out with what they can. But to John's point, this isn't an issue with the United Kingdom, it's Germany.
I'm going to go to one data point here, John. This morning, to me, I'm not getting much love off the data screen, but I do note Euro Swissy, strong Swiss, a bit of a surprise, not through to new record strong Swiss, but nevertheless, there it is. The haven has come back.
The future's a bit softer as well, TK. I'll whip through it for you. We're down 1/10% on the S&P. On the NASDAQ, 1/10% lower also. Yields are higher by 7 basis points. Kind of the theme of the session so far. Steeper curve, yields up a whole lot more at the long end, 246.34. On crude, 103.96, just short of 104, up about 0.7%. Euro dollar, maybe not the one to watch, Tom, unchanged there. The Aussie really outperforming as Governor Lowe of the RBA takes a baby step towards perhaps an interest rate hike in the not too distant future.
Into the second quarter, what to do after negative 8% in bond price, after challenges for the equity market with all of this news? Sarah Hunt joins, portfolio manager of the Alpine Woods, with a real tangible effort of what do you do with a portfolio. What is the single change you've made April 1st?
I'm not sure that we've made any single changes on April 1st. I mean, if you think about the larger economic backdrop, which you were just discussing with commodities and everything else, you've had years of history where the OECD countries have basically said, we're not going to do a lot. We're going to try to move some of this stuff like mining and oil production outside of these areas. And now this is coming back to be a real problem when you start to have geopolitical problems like we're seeing right now with Russia and Ukraine, which is just horrible. And countries now trying to figure out, what do I do now that I've outsourced all of my energy production and some of the other production to other places? We had already been moving in the direction of realizing that the Fed was raising rates and getting to more stable things in the portfolio, higher cash flows, better balance sheets, things of that nature. So it's not a huge change right now, but it is looking at how do we take advantage of what we think is coming in the future. And unfortunately, I don't see energy prices coming down that quickly. I don't see food prices coming down that quickly. And I think that's going to be a real problem globally. And it's going to be a problem ultimately for equities as well.
Well, let's talk about where that problem is concentrated and what you're pulling back from, Sarah. Can you be more specific?
Well, so we added some energy towards the beginning of the year because it was clear that even before the Russia-Ukraine situation, the fact that there has been a pullback in investment in the hydrocarbon space because people are looking for newer ways to produce energy has meant that you've seen an underinvestment. And as prices were starting to go up, it started to look like that could be something that was going to continue. And the Russian-Ukraine situation just exacerbated that. So we added some energy in the beginning of the year. There's also places where on the technology side, you saw some stocks come down quite dramatically in the last couple of months. So we looked at some of those large franchises like Adobe that we didn't have representation in, and we put some money to work there as well.
What do you make of the move in the home builders year to date? It's been pretty brutal, Sarah. We talk about the economic data in America. We're told it's great, but the forward look, given rising interest rates, the home builders have been hammered.
Well, I think that, I mean, we'll see how that actually plays out, but similar to some of the technology stocks getting hit very early in the year on the back of the potential of rising interest rates, I think that part of the problem with housing is that playbook says that when rates go up, housing comes down. But you've had such underinvestment and there's such a demand for for housing, especially on the lower end, and the unintended consequences of the great financial crisis making single-family housing an investment class has also taken the ability of people to buy those single-family houses out of the market. So I think the demand is there. The question is going to be what happens with pricing, materials, labor, all those costs are going higher.
What's the best hedge right now, Sarah, if there is this feeling that we are heading into a slowdown? Is it, on the margins, certain U.S. equities?
Well, I think that we go back to the fact that, once again, the U.S. equity market tends to be the strongest when things are weakest globally. And I think that the U.S. economy, even with the challenges that it's seeing, is not seeing the problems that you're seeing in some of the emerging markets. You do have debt issues in the United States, but it's not going to be as bad as dollar-denominated debt that's coming in other places. So I think U.S. equity markets are a decent place to hedge. It's just a challenge, when you look at the rest of the globe. It's not so much how great the U.S. is, it's how much more of a challenge the rest of the globe is facing right now.
What are you doing with cash right now? Are you hoarding it or are you actually deploying it?
Well, I'm a believer that cash does have a place in portfolio management. Not a huge amount of cash, but we are on the margins higher on our cash positions than we have been, just because we think that there's more volatility. And if you want to be able to take advantage of that volatility, you'd like to have some cash sitting around, because the drawdowns, we've seen some drops that happen very quickly and then rebounded very quickly. And it's very difficult in those moments to try to sell something that's down to buy something else that's down. So we have some cash on the portfolios right now and probably a little higher than normal.
Sarah, a lot of good studies on how out of vogue equities are. Liz Ann Saunders just out with a great chart on Twitter on that. What is the level of unlovedness of equities right now? And what do you do with that knowledge?
Well, it's a relative game, because there's equity participation does not go across the board. I mean, if you look at some of the problems that the U.S. is having right now, a lot of people do not participate in the stock market. And I think that fixed income, which has come down so much, is starting to get a little bit more of a bid here because rates have gone up. But the concern that the Fed is going to keep hiking makes the bond market seem as volatile as the stock market. So I think if you look back at what's happened over the last 6 months, and not the last couple of years, because I'd argue coming out of COVID, you're not going to expect those kind of equity returns again. But I think that you've got some real decent growth in the equity market, even if it's not going to be the stellar growth that you've seen in the last couple of years. I think you've at least got some ways to participate in companies that can grow. And I think that's going to end up being important, especially given a backdrop in fixed income, which is going to be, I think, more volatile.
Sarah Hunt of Alpine Woods Capital Investors, thank you. Just got a message from a Bloomberg subscriber. It reads as follows. As you know, I call Jay Powell wrong way Powell, and I have no sympathy for the Fed. I wanted a 50 basis point hike in January, then they could watch and wait. I've been telling our brokers that the surprise trade of 22 may be long treasuries, not for the coupon, but for the capital gains. TK, that note just in, I thought it was quite interesting, the trade at the end there.
I think there's a diversity of opinions here, John, and I'll Steve Major. If you get a yield stability and even a yield move, that's where you get total return and capital gain. That's a minority opinion right now.
And if we're threatened with a significant growth slowdown, which of course, Lisa, some people are very worried about.
Well, that's what we heard from Kathy Jones and, frankly, from Francis Donald, both of them saying that. And they're about to start buying if we start getting a little bit higher on the 10-year.
You touched on this earlier, Tom. Here's another one for you. Jens Stoltenberg, the NATO Secretary General, saying the following: NATO supporting war crime probes in Ukraine. That one's been building in a bigger way, Tom.
Yeah.
Over the weekend and after the weekend.
Absolutely, but the war crime concept is a timeline. It takes a long time, and there's a process and all that. I hear a lot of people screaming about these atrocities and, of course, the alleged comments coming out of Moscow and saying, what are we going to do now? And that's what Mr. Zelensky clearly is pushing.
And, Tom, reframing the map as well in many ways. NATO expecting Russian push in the east and to the south of Ukraine. That's different. That's different to where we were maybe a month ago.
Oh,
when they were
way
trying
different.
To take the whole country.
Way different. Yeah, coming down from Belarus down to the north, that's gone. I've been talking to Black Sea from day one, John, just because if you read Peter the Great 101, that's all Russia cares about is the Black Sea.
Looking forward to continuing this conversation with Andrew Weiss, the chairman and vice president of studies at the Carnegie Endowment for International Peace. That's just around the corner. Futures, negative 0.2 on the S&P. On the NASDAQ, down 0.2% as well. Yields higher by almost 8 basis points now to 247 on a 10-year yield. From New York, this is Bloomberg.
Keep
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Bloomberg's learned that the EU will propose a mandatory phase-out of Russian coal imports. That's a direct response to reports that Russian troops committed apparent war crimes in Ukraine. The European Commission is also expected to propose banning most Russian trucks and ships from entering the bloc. The U.S. Treasury is increasing pressure on Moscow to find alternative ways to pay bond investors. Authorities have halted dollar debt payments from Russian government accounts at U.S. banks. Russia now has three options: drain dollar reserves it holds in its own country, spending new revenue, or going into default. The U.S. Senate has set Ketanji Brown Jackson on a path for confirmation to the Supreme Court this week. Debate begins today on the nomination of the first black woman nominated to the High Court. Jackson's confirmation is all but certain now. 3 Republicans say they'll vote in favor: Susan Collins, Lisa Murkowski, and Mitt Romney. And the black boxes from that China Eastern Boeing 737 crash have now been sent over to the U.S. The 2 flight recorders have become central to solving the mystery of why the jet entered a sudden nosedive before crashing. Any evidence that clears or implicates Boeing could be crucial for the company's future in China. A measure of pressures on the U.S. supply chain has risen to a record. The Logistics Managers Index advanced for a 3rd straight month in March. It found dwindling warehouse space and unprecedented inventory costs. Companies that boosted stockpiles during the pandemic are trying to figure out if they overbought. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. War in Ukraine rages on.
President Putin's invasion is brutal.
Turn to Bloomberg for up-to-the-minute reporting from around the world and analysis of what it all means to you.
The intention here is to increase the pressure on the sanctions front.
I think the United States policy is that the sanctions continue until President Putin is no longer there.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
The Russians obviously miscalculated the extent of Ukraine's resistance, which has been heroic, and they miscalculated the capability of their own military, which has had one failure after another from the strategic level on down to simple logistics like food and gasoline.
John Bolton there, the former U.S. National Security Advisor on Bloomberg in the last 24 hours from New York City this morning. Good morning to you. Futures are negative 0.2% on the S&P, about an hour and 12 minutes away from the opening bell. On the Nasdaq 100, down 0.25%. Yields higher TK up by 8 basis points, almost inching towards 248, sub 250 at 247.45.
We have prided ourselves on sharp conversation of this war in Ukraine from General Kimmett, General Hodges, Andrew Stavridis, Elliot Ackerman, the Marina on the other day, and yesterday John Bolton, and thank you for the fierce comments on John Bolton, always informative and controversial. We continue that discussion today, and we do so around the Carnegie Endowment for International Peace. This was simply formed out of Andrew Carnegie's outrage of World War I. He died within a year of the end of that war. Andrew Weiss joins us this morning, Vice President at Carnegie Endowment for International Peace. Andrew, I want to talk about autocracy. From the past, it's Hitler, it's Stalin. Putin has mentioned this. We have Putin. We have a massive win in Hungary with Orban as well. How do we control, manage, or end these outcomes of autocracy as we see in Ukraine?
So it's great to be here with you, Tom. I am always skeptical that the United States has within its power great ability to shift the ultimate political direction of Russia. And as much as what President Putin is doing in Ukraine is horrible, and as much as the world must level whatever tools it has to try to slow down Russia's war in Ukraine, we need to be realistic that regime change in Russia is something that has eluded Western policymakers now throughout Putin's tenure. And every day Vladimir Putin wakes up when he comes into work, he's mostly concerned about the safety and survival of his regime. And he's prepared to escalate and do things to protect himself against that threat. And that's been basically what's been animating him throughout the past 2 decades.
If the people of Russia and the various peoples of Russia find out what's going on, will they give him support or will they walk away from Mr. Putin?
We need to be careful about what Russians are willing and aren't willing to accept. And one of my colleagues at the Carnegie Moscow Center wrote about this very powerfully in Russian earlier this week. Russians are living in an information vacuum, and for the most part, they are doing that by choice. They are not seeking out the truth. They don't believe that their country is responsible for atrocities or war crimes in Ukraine. And if we puncture that information bubble, which is a big if, I'm not sure that people in Russia are prepared to take action to deal with the problem of living in a country that's ruled by Vladimir Putin. And that's just for a very simple reason. The instruments of repression that Vladimir Putin has built up over the past 2 decades are intimidating. They are prepared to use violence and other measures to keep Russians off the streets and to prevent political dissent from spilling over into questions of how their country is ruled. And you see that level of fear among average people as well as the elite. And so for the West to be banking on either a split within the elite or bottom-up pressure on the regime to take care of our Putin problem, I think is really unrealistic. The way we're going to deal with our Putin problem is action by Western leaders. It's not going to come from within Russia itself, unfortunately.
Where does China fit into this, Andrew, given the fact that over the weekend and frankly yesterday, the New York Times put out an article talking about propaganda that China has made that actually paints Vladimir Putin in a very nice light for some of the party members?
So I think a lot of what China is providing right now is moral support, as you say, in the propaganda sphere, in terms of supporting Russia's lies about possible biological weapons and things like that it claims Ukraine has, all of which is made up whole cloth. But when it comes to the ways Russia needs help right now, the main support China is going to be providing is by providing the bid on Russian oil and gas resources, which China buys on, sort of at the moment, as much as it wants from Russia. The longer term problem for Russia is that China cannot be expected to be the backstop and the fiscal authority for its government. And so as Russia comes under increased pressure from Western sanctions, it's going to be turning to China out of desperation. It's going to be looking to China to be its savior. I would be very surprised, particularly in the technological area, which is affected by Western export controls, if Chinese firms are going to be willing to step up and provide inputs to the Russian industrial sector that it can't buy now from the West.
Andrew, just to wrap things up, and we only have a little bit of time, what do you think the West could do to bring this to an end more quickly?
I think that the West is going to keep ratcheting up sanctions. The problem is that there isn't a ton of headroom left, short of a full-scale embargo on the Russian economy. And so if the West is prepared, for example, to cut off all imports of Russian oil and gas, which I think Germany is not willing to countenance at this point, if the West is not prepared to go to that length, I think the most likely outcome is that this war simply drags on. And over time, it's likely to morph into something similar to the Balkans wars of the 1990s on a much vaster scale.
Andrew, we appreciate your time. It's a clinic for all of us. Andrew Weiss there of the Carnegie Endowment. Tom Keene, what a difficult time. And it's got harder, not easier, over the last few weeks and the last month for that matter too.
These atrocities are a major shift, major shift, John, in that before this, invisible maybe or not believing in this in our lack of news, it was about NATO, it was about diplomacy, it was suits and ties flying around. And that's just vaporized in the last 4, 5, 6 days.
Tom, it's something you said at the start of the invasion. The social media has changed the way we absorb war, how we witness it, even all these miles away, thousands of miles away from where it's taking place.
Right.
And Tom, that ramps up the pressure on the politicians to do more. Can the Europeans this week get away with just offering a proposal on phasing out Russian coal after what we all saw over the weekend?
I think the reporting as a proposal's got to go further. I don't have knowledge on that. John, I would do this overlay. The second Chechen war was grim. That ended 2009-ish, 2008-ish. Twitter started, yes, a few years before it. But can you imagine the Russian wars in Georgia or Chechnya with the kind of social media today? And again, this Biden approach, I don't know whether to give the president approach, but John, the Biden approach of showing immediate intelligence is one of the original points of this moment.
Yeah, and some think that he's been congratulated for, Tom, along the way, before the invasion and through the invasion as well. Tom Porcelli is going to join us of RBC Capital Markets in about 5 minutes' time, and why he has some doubts the Fed can keep going at a 50 basis point clip through the summer and beyond. That's next. This is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Here's a move for you. Let's get straight to it. Twitter in the pre-market is higher off the back of this headline. Crossing the Bloomberg terminal. Twitter to appoint Elon Musk to the board of directors. Twitter saying there's an agreement with Musk to not own more than 14.9% of the company. Of course, he's taken a so-called passive 9.2% stake. 24 hours later, Tom, there's nothing passive about it. Twitter saying Musk's term to expire at its 2024 annual meeting. I'd say this is the beginning, Tom. This is not the end.
John, I just did a center tendency on the Twitter ascent when they were above $60 a share. And the average point there, and I'm just making this up quick, folks, on the Bloomberg terminal, is $64 a share. So from 30-something to 40-something to 52-ish right now, and that's how far we are from the average of the good old days of Twitter.
This is a man who adds a ton of value to everything he touches, whether it's Tesla, Dogecoin, or in this case, whether it's Twitter for that matter as well. Tom, is this going to be any different?
No, the debate this morning, and I'm not up to speed on the, the fancy techie stuff of this, is an edit button, John. So when I go out and trash the tots, the rare times when they lose, I guess I can go back in and edit the tweet later.
Yeah, this is not going to be about an editing button at all.
Yeah.
And I think if we lead with that, we're being disingenuous. This is going to be about freedom of speech. And Elon Musk's interpretation of freedom of speech versus, say, currently what's going on internally at Twitter and their interpretation of freedom of speech.
Does he push to bring back Donald Trump?
I think he might do. I don't know what's in his mind. I wouldn't get into the business of trying to work out what he thinks. Is that possible? Sure, that's possible.
I think that the edit button is part of the conversation. I agree with you that it's not the main thing, but that's part of crowdsourcing news standards, right? I mean, these are some of the discussions that you have in a newsroom. Do you edit a story? Do you correct it? Do you then have to say that you did correct it? All of these things are basically being crowdsourced, and he's being a very vocal voice in leading the charge.
Let's see who the Republicans are happy with down in Washington, D.C. How many Republican senators line up in support of Elon Musk making a push to do something about what they're unhappy with at Twitter and elsewhere too? Tom, I think it's the beginning of something bigger. And the edit button, that's a media distraction.
Okay, maybe you got to see who comes in here. You got to see who comes into play when you look at the HDS function there with Mr. Musk very clearly at the top of the pile of who owns Twitter. Right now at the top of the pile of wage analysis is Tom Porcelli, chief U.S. economist at RBC Capital Markets. It's percolating, Tom, that wage growth, maybe it's subsiding. What does a Porcelli take on your meat and potatoes wage growth?
Yeah, good morning to you all. It's good to be with you. Yeah, look, I think it's been interesting, right? If you look at the payroll report that just passed, I think it was pretty interesting that on a 3-month average change basis, it looks like average hourly earnings are starting to slow. Now, again, I want to stress, slowing from a really high level. But it nevertheless, I think, that directionally is where we expect it's going to go, right? I mean, it's, look, the idea that growth is going to slow, I don't think that that's debatable. I think where it is debatable is the degree to which it slows. But as the economy slows down from, we printed, what, 8% consumption last year? We're going to slow down this year and probably going to be somewhere between 2 and 3% from a consumption perspective. I think that's going to take a lot of the sort of the heat off of the wage dynamic. And so by the end of the year, I think we're in a very different spot. Now, I can tell you that in terms of total compensation, you're probably looking at 5 or 6% total comp, which compares to about 8% total comp last year. That's in nominal terms.
Right.
In real terms, you're meaningfully lower than that, right? So you're looking at probably, what, 1 to 2% real? I mean, it's just, I think that there's a lot less oomph from a wage perspective, and thus that'll show up in consumption.
Tom, I channeled my inner Porcelli a couple days ago, and I did the ECI series, Wages and Benefits, adjusted for inflation, and the wage decline that we're living has been much longer than the one a number of years ago. What is it about the duration of negative wage growth that matters?
Yeah, I mean, look, you're seeing it show up in the confidence numbers. I remember when you and I, or us four, we were talking about this months ago. The thing about the confidence numbers and why they were falling, it wasn't this idea that, they were worried about sort of economic growth or recession. At least back then they weren't worried about it. I mean, today might be different. But back then they were worried about it because of inflation. And you saw it show up in the data, in the confidence data in a pretty meaningful way. So I think that to me is, sort of one of the, one of the most important points about what's happening from a confidence perspective. Higher inflation is eroding confidence. And that's been true now for many months.
Just want to come back to you in just a moment and pick up on the Twitter story, because the Twitter CEO is out on Twitter tweeting at the moment and saying the following: I'm excited to share that we're appointing Elon Musk to our board. Through conversations with Elon in recent weeks, it became clear to us that he would bring great value to our board. Tom, I'll go on to say that he's both a passionate believer and intense critic of the service, which is exactly what we need on Twitter and in the boardroom to make us stronger in the long term. Welcome, Elon. There we go, TK.
It's going to be fascinating. And folks, as you all know, it's something that the three of us live on every single day, providing different kinds of value. And Tom Porcelli, the Twitter debate goes to the new technology that is part of the fabric of labor America. What's the technology stream going to be like in the next 2 or 3 years? Is it labor's friend or foe?
Yeah, I think that this is a really interesting conversation point, and I'll try to keep my response brief here. We've been writing about this, and we wrote about it in our year ahead. I think one of the most interesting things to come out over the course of the next year or two is going to be this idea that companies are going to start to really, and they're already doing it, engage in technological advancement to help boost productivity. And I think one of the things that really sort of forced that idea, I mean, honestly, I think you can go back as far as the trade war, that really sort of forced companies to sort of rethink how they really wanted to sort of engage from a productivity perspective. I think fast forward to COVID, and then I think fast forward to the idea that companies were having a really hard time finding workers, and as a result, wage pressures were being bid up. I think that this to me, this entire dynamic, again, dating back at least a few years, I think is really going to be a very fascinating thing to watch. I think CapEx could actually have a really good couple of years on the back of this dynamic alone, where companies are basically trying to take some of the sort of ease back on some of the margin pressure that they've been experiencing. I think, one, they want to scale back on a lot of these wage pressures that are in place, and two, I don't think they want to find themselves in a position to basically, have to really sort of, pound the table to find labor. I think all of these factors, there's a confluence of factors over the years that I think are forcing us down this path.
Tom Porcelli.
And again, just to be clear, it's happening already.
Of RBC. We've got to leave it there, unfortunately, Tom. Appreciate your time. Just on that breaking news, just to wrap up Tom's thoughts there, it's easy for every Fed official to talk tough on inflation when the labour market is humming. That could change later this year. That could break the groupthink. Let's get back to that top story. Twitter in the pre-market with a little bit of a pop off the back of the news from Twitter that Elon Musk will get a seat on the board of directors. TK, that news out just moments ago.
What do the others do? How does Meta, Facebook, Instagram, how do they respond to that? How does somebody as ginormous as Microsoft or Apple at above 2.9 trillion, how do they respond to this? This is not just about Twitter.
Well, let's start with objectives and go back to a tweet of Elon Musk on March 26th when he said this. Given that Twitter serves as the de facto public town square, failing to adhere to free speech principles fundamentally undermines democracy. What should be done? Now, is that the conversation that's going to take place on the board of directors now, Lisa, within the company? And when he says what should be done, what can be done? What will they do?
Well, and to your point, how transparent can they be about who and who is not allowed to be on Twitter? We talk about, of course, former President Trump, also other Republican lawmakers in particular. At what point, though, have we already been having that debate on the boards? At what point does he bring sort of the swing vote in allowing more free speech and allowing more versus the argument on instigating some sort of violence or instigating certain types of misinformation? These are the other arguments on the other side. I'm really not weighing in. I do think that the idea of free speech is front and center. This highlights it in a much more poignant way.
Just tenure out to 2024. What's the Dorsey influence here? Basically, cut to the chase, John. This is Elon Musk versus Jack Dorsey.
Well, Dorsey's taken a back seat on all of this, hasn't he, Tom?
Well, I don't know.
Isn't this the opening for Elon Musk to take a bit more of a front seat? The other thing I'd be thinking about from a stocks perspective, Tom, does this become a stock that's based on fundamentals anymore or based on a so-called story? The reason I ask is that we've got a note out from Brent Thill of Jefferies on Twitter, and he makes this point, Tom, that investors will need to see substantial progress towards Twitter's 23 revenue and daily user targets, given the stock is up this year by so much and trading at a more than 100% premium to Facebook owner Meta Platforms. Is it about the fundamentals anymore if this is taking place?
It is about the fundamentals, and the fundamentals aren't there. I don't get the revenue platform. I need our great team at Bloomberg Intelligence and others describe for me what the revenue platform is.
Can you describe the rationale behind this move yet? Can you fully explain that?
Elon wants Tesla 101. It's Elon. Maybe Jack Dorsey ought to go up in space.
Can you explain the move in Dogecoin when Elon Musk was joking about it? Honestly, a lot of these moves, you can sort of wonder, what does fundamentals actually mean? As far as revenue generation, some people are speculating with the edit button, you could potentially charge people for a premium that also includes an edit button. Basically, the more viewers you have, the more you can play with different revenue streams that potentially could stick.
And the engagement of the user base, the existing user base, is something they all want. I'm not totally dismissing the edit button story. I'm just saying for Elon Musk, he's been pretty clear that it's about something else.
Of course, I'm saying, though, that the idea of crowdsourcing news and that basically this is just accelerating that. And we're having that argument about free speech that a lot of news organizations had in boardrooms quietly. And now we're having it very publicly in a 2022 way.
If he can add the value to this company that he's added to Tesla, then we've got quite a story in front of us. Twitter right now up by a little more than 5% in the pre-market, Tom.
John, headlines quickly. EU, von der Leyen, EU imposing import ban from Russia. I don't know what that means, but it's a big deal.
Need to raise pressure on Russia. What kind of import ban from Russia, Tom? You got any more detail than that?
Nope, that's all I got.
Okay.
But it's moving. I want to say to people on a Tuesday, the story in Europe is moving in real time because of those photos.
The EU to ban Russian and Russian-operated vessels from EU ports. Just getting that headline crossing.
Yeah.
As we get more headlines, we'll bring them to you. From New York, this is Bloomberg.
Keeping you you up to date with news from around the world. With the first word, I'm Ritika Gupta. Ukraine's President Volodymyr Zelensky will address the United Nations Security Council today. The speech is scheduled to begin at 10 a.m. New York time. In his nightly video address on Monday, Zelensky referred to the killings of civilians by Russian troops and said the death toll may be even higher. Bloomberg's learned that the Pentagon will be sending Ukraine new Switchblade drones armed with tank-busting warheads. That's in addition to less powerful versions of the unmanned aircraft. The weapons are part of a $300 million package of military assistance announced last week by the Defense Department. And a change at the top of Keurig Dr. Pepper, the coffee and soft drinks company. Chief Financial Officer Ozan Dokmecioglu will be the new CEO starting in July. He'll replace Bob Gamgort, who's agreed to stay on as executive chairman for 2 years. Under Gamgort, Keurig Dr. Pepper's market value has grown by about 3/4 to more than $54 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your just soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Sure, we could see some upside in yields, especially as we see ongoing hawkishness from the Fed. When you look at that 40-year downtrend in that 10-year yield, I'm a believer we can't yet break out of it. And that means we're probably near the peak in this rates move.
Frances Donald on with us, really spirited today. She's a Montreal Canadiens fan, which means she's been betting on the Canadiens and losing money this year. We are going to digress right now. We're going to have a chart from Kriti, and then we've got a very special guest coming up. Kriti Gupta, what do you have today?
Yeah, Tom, let's talk about the Dow Transports Index here, because as we talk about where the stock market is really headed, some people are looking at the Dow Transports Index as simply a beacon of what potentially may come. The idea that as you start to see airlines, shipping, railroads even kind of drop, the index has dropped 7.3% in the last 4 days. Is that a sign of what's to come in the S&P 500? That's the bear case, Tom. Let me give you the bull case very quickly. Since 2010, 124 times the Transports Index has fallen over 5% in just 1 week. 85 of those times, the S&P 500 was higher a month after. In other words, that translates to about 2 out of 3 times the S&P 500 rallied a month after this big drop in transport. So there's your bull case. That's my chart of the day.
Kriti Gupta, thank you so much. The bull case led by growth here recently. This is a joy, and for those of you on Bloomberg Radio, it's an iconic voice from WJR of Detroit, and long before that, Michael Barr holding the record for seeing 10 consecutive Toledo Mud Hen games. He joins us right now. Bloomberg Business of Sports. Michael Barr, you and Bloomberg Business of Sports are iconic at all this, and you've put action from your words, which is to win the TV Newser bracket. I am in 400th place in that as well. Let's talk first with me and Lisa about the size of the betting involved. Was this a record year?
Oh, yeah. In fact, the books were hoping that North Carolina was going to win. And
really, they wanted UNC to win that too?
Yeah, because they were the underdog, and they were going to make a lot of money. And at the end of the first half, it was looking like all the books were like, hooray. And then all of a sudden, the wagon wheels fell off, and that was the end of that suit, because then Kansas pulled off the one of the most historic, if the most historic comeback.
Huge comeback. I mean, did you call into the locker room at halftime and say, let's go, boys?
I said, look, I got money on you. So, look, we got to go.
Probably me. Lisa, jump in here. But what probably happened is Mrs. Barr called the locker room and said, let's go.
Listen, our entire savings is resting on this. To talk about the betting aspect of it, how much have people transferred away from brackets, which were kind of the mainstay of a lot of office pools, when the office no longer is as much of a thing, and gone to betting, which is increasingly legal and actually could potentially reap you a winning, which you will next disclose, Michael Barr?
Well, what happens a lot of times is that, like you said, in the office, you used to have the bracket, and everybody, that was the only way you could, get some money playing this. But then when online betting came along, you could do parlays, you could just bet on a single game, you could take the odds, you could take the points. I mean, it changed the whole landscape of how you approach betting. No longer do you have to go to Las Vegas anymore just to go and place a bet.
So let's talk about process here. Do you just basically come up with a list and then a dartboard and just throw the darts? I mean, what's your process here?
I like to work from the inside out. My first choice was Kansas to win the whole thing.
Really?
And I started with Kansas, and then I started going on down. I had Duke and Kansas going in the finals. And then, unfortunately for Coach K, he went out with North Carolina. By the way, what I had a chance to meet the guy one time, and just a brilliant gentleman.
John from the United Kingdom emails in and says, Tom, let's speak the truth. TV news or poll, Pharaoh defeats Keane. That worked out well as well. Michael, I want to talk about where all this is going. You and I and Paul Sweeney lock horns on this every single day on Bloomberg Radio in the 9 o'clock hour. And I want to bring you and Sweeney together with the new media, the new technology. Does March Madness just get bigger? How does it change?
As long as we don't have another COVID era which slams the whole thing down, it's going to get bigger and bigger. And give a shout out to the women's NCAA.
That's right where I wanted to go, South Carolina net. Is it getting momentum?
Yes, it is. And if that is growing as well. And all of this I attribute to online gambling. Because now you can make a bet on the team, and you have to research the team if you're going to do anything right to win something.
Michael, this was great. Lisa did an online bet for University of Chicago. That really worked out.
Actually, probably our inverse sports ETFs, and the University of Chicago would be key among those in terms of outcomes. Taking a step back, how much has this industry grown? I mean, just to give a sense of how much momentum there has been, especially as everyone was at home with their checks and nowhere to go.
Well, let's go back to when the Supreme Court said, okay, you can have online gambling now. And this was before the COVID era. So it started growing right there. That was like about 5-something years ago. That's when it started to grow. And it was gonna take off big time then. And then all of a sudden we hit the COVID era, and there was nothing to bet on except marble racing. And so then it, came back. I mean, it was just the coaches love seeing 70,000 people in the stands watching the game, which means, hopefully this is the post-COVID era, and we can continue on.
Right. Our people talk to you, Michael, about coming on air today on TV, and we welcome all of you on TV and radio. And one of the people in your entourage said the only way to get Barr back is to talk Tigers. Austin Meadows to the Tigers?
Yes,
Are the Detroit Tigers destined this year?
Let's calm down. They're probably going to be 50.
Make
50,
500 ball this
they're going to
year,
play 500 ball. But again, we are rebuilding. And I have always loved I know we were rebuilding every year, but I mean, I love the Tigers. Anything from Detroit, I'm a big fan of. So I wish we had that era where we were in the World Series against the Giants, because we had a pitching staff that was second to none. I'm
Michael
so sorry
Barr,
to see it.
thank you so much. Bloomberg Business and Sports, of course, all he does for Bloomberg surveillance each and every day. Lisa, I think we've got to regroup with the tape. It's a little soggy.
Yeah.
But am I right, Lisa, that the headlines from Europe have just taken over this day?
Yeah, in particular from European Commissioner President Ursula von der Leyen coming out and saying that the EU is working on more sanctions, including oil imports. This is a big deal, talking about how they need to raise pressure on Russia, talk about the potential for having some sort of import ban. We've already talked about the coal issues. We've talked about the vessels issues.
Yeah.
These are all sort of edified in addition to semiconductors, machinery. Again, the key issue is oil, and she does say they are working on more sanctions having to do with oil imports. So really kind of giving some steam to this feeling that coal was sort of a beginning, an entree in some of the hairier areas.
It's going to be interesting to see. And that I looked at Amsterdam, Rotterdam coal. You can do that on the Bloomberg this morning, up about 400% from the quiet of long ago. So that'll be important to see. Futures -11. Dow futures we do for John Farrow. Dow futures -79, and the VIX with that 18 close yesterday, really extraordinary. Comes back a little bit, 19.26. What am I focused on? Swiss franc. It is stronger Swiss franc. A bit of a surprise there, but a real interesting dynamic with Euro Swiss. That's for something for global Wall Street to watch. To watch and listen to, Esther George will join in the 10 o'clock hour on Bloomberg Markets. An important, a timely interview. Please stay with us. This is Bloomberg. Good morning.
SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Bonds are lower, yields are higher, equities are a little bit softer this morning. Good morning to you all. Equity futures down about 1/3%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue, pricing in a growth slowdown.
This is the markets readjusting the inversion of the yield curve. This melt up in yields.
It's a pretty strong signal that we are facing some kind of significant slowdown.
When the curve gets flat or inverted,
it's telling you that the economy is strong today, but it may not be in the future.
I am very impressed and quite honestly surprised about how resilient equities have been.
The equity market's balancing. Yes, there's some greater risk of recession.
It's telling us one other thing.
There's also a possibility that things continue on for another 12, 18, 24 months.
It's too early to sound an alarm bell on a recession.
What the yield curve is discounting is higher odds of a growth slowdown next year.
Within a year's time, you're going to see that the impact of the flatter curve on the broader economy.
Joining us now is BlackRock's Kay Moore, PGIM's Greg Peters, and Morgan Stanley's Dan Skelly. Kate, to begin with you, to what degree do you think we are pricing in a growth slowdown in the more economic sensitive parts of this equity market?
Yeah, so John, listening to those comments, and of course from two of my colleagues, Jeff and Russ, I tend to agree that the equity market has been probably a little bit more resilient than many people would have expected, particularly given the rate adjustment and given this sort of myriad of challenges we're facing, whether it's inflation or geopolitics, or this rate adjustment that we'll have through the balance of the year. That said, I think the real show me moment is going to be as companies start reporting first quarter. And I say this because not just what they did in the first quarter, but as management teams really discuss with the market their expectations around margins and cost control, how they're adjusting their supply chains, how they're dealing with higher energy input costs, I think is really going to set the tone for the direction of the market over the course of the next 6 months.
What are you expecting, Kate?
I'm expecting actually that you're going to see a massive bifurcation within the market. You're going to have these companies that have controlled their costs, that are not facing major labor challenges, perform fairly well, but the bar is pretty high. It's not just what consensus earnings are. I think we need to not just beat those earnings, but again, have reaffirmed guidance from management teams and strong conviction from those leaders that they're going to be able to weather all of these challenges I was just outlining.
Dan Skelly, growth is a big theme for you and the team at Morgan Stanley. Keith Lerner of Truist picking up on some of the weakness we're seeing already in the transports, not just there, in the home builders, in the financials over the past few days, semiconductors, the yield curve inverting too. Dan, are you expecting to see more of this in the months to come?
Good morning, John. We are, and we would say, look, certainly as it relates to the curve signal and some of these other subsectors weakening, as you mentioned, financials, transports. Look, we are on alert. We are not yet sounding the total alarm just yet. And the history is, look, post a yield curve inversion, markets actually tend to do fine for the next 12 to 18 months. But it's all about that rotation intra-market, right? It's all about going up in quality, favoring some of the more defensive sectors, and to Kate's point, certainly favoring pricing power as well. I'll add just one last thing as it relates to the global equity perspective. Over the last 6 or 8 weeks, everyone's been talking about how resilient the U.S. equity market has been. But consider this. We've seen more lockdowns in China with Shanghai. We've seen more repercussions and ramifications likely in terms of Russia, Ukraine on Europe and a potential slowdown there. So the U.S. equity market really did get a bid because it was probably the best relative bet globally.
Greg Peters, your thoughts on all of this, the prospect of a harder landing later this year?
Yeah, so I think the timing is really tricky, Jonathan, but the outcome is pretty clear in my mind, which is the economy will absolutely slow. The number of rate hikes being priced in and what the Fed is telling you, and given the strength of the labor market, all point to they really have to hit the brakes hard here in trying to quell this inflation story. So to me, it's just a matter of time, and it's inevitable in my mind.
Greg, hit the brakes hard. What does that mean? 50 basis point hikes through 4 meetings like Citi. What are you thinking about? Go hard on QT?
Well, all the above, right? I mean, you think about, the March meeting and then the subsequent meetings. I mean, the rhetoric has just changed. So I think 50 is definitely on the table. I think another 50 is also on the table. But they are going to be data dependent. And I think the strength of the payroll numbers last week and the revisions give them ample cover to be much more aggressive. And as far as QT is concerned, I think the markets are dismissing that as a risk or even part of the tightening phase. So to me, a policy mistake, as I've been saying for quite some time, is inevitable.
Greg, which part of the market is dismissing that? And if you expect a so-called policy mistake, how are you expressing that market-wise as you allocate capital right now?
Yeah, so I would say the risk markets are largely dismissing. The shape of the curve, I think, directionally is telling you the story that, the Fed is, slowing down growth in the back end. But I think there's so much momentum in the risk markets that it's really tossing aside kind of these risks. And, Jonathan, maybe it's too early, but at some point you're dancing between the raindrops and it's going to be really difficult to get out.
As you indicate, the labour market data has been so strong, that's going to set them up for a big move for the next meeting in early May. Chairman Powell told us to look towards the minutes of the last meeting to get some detail on balance sheet reduction. So tomorrow we'll do just that. Let's get to Mike McKee for a little bit more. Good morning to you, Mike.
Good morning to you, John. I'm trying to figure out a way to top Greg's dancing among the raindrops metaphor there. But you listen to Greg's view, and you can see why Jamie Dimon says he pities the Fed, because the Wall Street view is they are behind the curve and that they are going to break something by raising rates too soon. But at the same time, you've still got COVID, you've still got the war in Ukraine, and you have the Eurodollar market pricing in Fed rate cuts in a year or two ahead. So what do? If there's any pushback, it may come today from Esther George, who is a voting member of the Open Market Committee this year. We'll be talking to her at the top of the next hour and get her view on the idea of whether you do 50 in 1 meeting or 2 meetings or 3, or whether you take a more cautious stance. At the same time, we're also going to be watching this week for Lael Brainerd. She's the only member of the board who hasn't spoken since the last meeting, and we don't know where she comes down on this. It will be very interesting. Sometimes she takes some positions that seem slightly opposed to where the chair is. And then, of course, finally, tomorrow we get the Fed minutes, and the Fed minutes are going to be crucial to this whole idea of QT. Do they have any clues to what kind of regime they're going to use to shrink the balance sheet? Is it going to be the same as last time with caps, maybe $100 billion instead of the $60 billion they used last time? And do they have any plans to sell anything along the way? So an interesting week for members of the market because they're going to get some clues to what their market is going to look like over the next couple of months.
An interesting day for you as well, Mike McKee, catching up with Esther George of the Kansas City Fed. Looking forward to that a little bit later. Mike McKee with the Kansas City Fed President, Esther George, 10 a.m. Eastern Time in about 43 minutes. Mike, it will be fantastic to watch you with a Fed official once more, especially ahead of these Fed minutes just 24 hours away. There is a more constructive view on the outlook for this market, and it comes from JP Morgan's Marko Kolanovic. He writes the following: the risk-reward in equities is not as poor as it's currently fashionable to believe. He goes on to say, the Fed repricing might be closer to the end, and headline inflation will mechanically peak soon. The start of Fed tightening should not be seen as a negative for stocks. Now, Dan Skelly, you know what's happened recently. Morgan Stanley comes out with a less constructive view. A few days later, Marko Kolanovic and JP Morgan come out with a more constructive view. Take those 2 points that come from Marko and his team, Dan, and respond to them if you can. The Fed repricing might be closer to the end, 1, and headline inflation will mechanically peak soon, 2, and all of this as a reason to stay long equities. Your thoughts?
Sure. And look, what I would say is there are certain factors, hopefully the normalization of COVID with some labor supply coming back into the market, that will depress some of those inflationary pressures near term. But let's face it, you got to offset that with some of the issues we've seen the last 6 weeks with this horrible conflict and tragedy in Ukraine. Russia is one of the biggest exporters of fertilizer in the world. And so we haven't even seen some of the food inflation pressures start to show up globally there. And we think that'll be more of an issue in the second half. So, you know, there are all these cross currents and offsetting factors to consider. It's a very fast moving market at the moment, obviously. You know, when you think about it, being long equities broadly, in our opinion, is not the way to go. You want to be more selective. You want to be more active. And we would also take issue with the fact that the Fed might be closer to the end. We think the Fed is really just beginning to start its tightening regime. So again, that augurs for being more quality focused, a bit more defensively biased at the moment. Look, we're at 4,600 or so on the S&P. We think that's the top of the range, given this interest rate move.
We'll keep building on this. Dan Skelly, Greg Peters, Kate Moore. Great lineup going into the opening bell. One stock we're looking at this morning, Twitter in the pre-market up more than 8%. Jack Dorsey weighing in. I'm really happy Elon is joining the Twitter board. He cares deeply about our world and Twitter's role in it. He goes on to say, Parag and Elon both lead with their hearts and they will be an incredible team. One of the many movies we're watching ahead of the opening bell. Let's get to Abby for more. Hey, Abby.
Hey, John. Well, yeah, this is really pretty impressive, this move that we're seeing in Twitter. Another big update. Right now, Twitter in the pre-market poised to go above the 200-day moving average. That's a fancy way of saying the long-term buyers are impressed here. And that's important because up until yesterday, this stock over the last year had been down more than 30%. Now it's down less than 20%, of course, on the not so surprising news that Elon Musk is now joining the board. So his 9.2% stake, not so passive as expected. And of course, he will not own more than 14.9%. But again, the stock is now technically stronger. So it's going to be interesting to see whether or not his board appointment and his stake brings other big investors to the company and on to becoming investors. Tesla, after yesterday's big 5.6% move up, it is now down ever so slightly. And of course, that move was on record deliveries. But it seems that everybody's very happy about this Musk factor for Twitter, John.
Never made sense calling this a passive stake, did it? All of yesterday, Abby.
Agreed. It really didn't, because he's clearly probably one of the least passive people out there, really a visionary and motivates people, inspires people, and seems to be doing the same thing for Twitter. It's very interesting, actually, in fact, that Michael, one of the biggest bears on Tesla, Michael Burry, known for The Big Short, he's saying he's very excited for Elon Musk to be on Twitter and they could even save America. Big words there, his opinion, but yes, people very excited for that.
Abby, thank you. About 20 minutes away from the opening bell, we'll catch up with Ed Ludlow on the West Coast with a little bit more on this story. The stock up by almost 9% in early trading. Coming up on the programme, the EU hitting Russia with fresh sanctions.
This guy is brutal, and what's happening in Bucha is outrageous. I'm seeking more sanctions, yes. I'll have time to announce that to you.
That conversation up next.
Has stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Remember, I got criticized for calling Putin a war criminal. Well, the truth of the matter, you saw what happened in Bucha. This warrants him, he is a war criminal. I'm seeking more sanctions, yes. I'll have time to announce that to you.
The President of the United States there, the EU following up with more sanctions. The EU Commission President Ursula von der Leyen saying the following this morning. Today we are proposing a fifth package of sanctions. She goes on to say an import ban on coal from Russia worth 4 billion euros per year, cutting another important revenue source for Russia. She adds to that a full transaction ban on 4 key Russian banks, among them VTB, the second largest Russian bank. This news coming in just moments ago. Specific new import bans worth 5.5 billion euros, targeted measures such as a ban on participation of Russian companies in public procurement in EU, and exclusion of all financial support, EU or national, to Russian public bodies. And finally, this tweet storm, if we can call it that, a thread out on Twitter, ends with this. We are also proposing further listings of individuals. We are also working on additional sanctions, including on oil imports, and reflecting on some of the ideas of the member states, like taxes or specific payment channels, such as an escrow account. A lot to get through here, so let's start the team coverage with Maria Tadeo in Brussels and Anne-Marie in DC. Maria, your thoughts on what we've learned from European leadership in the last 20 minutes?
Well, you know, let's just run through the numbers. And honestly, the first takeaway that I would have from this, by the way, is that they finally broke into the energy. Remember, this had been a question mark, whether or not they would dare to go into energy. Now we see that they do it for coal. Now, overall, if you add up all the numbers and everything that has been announced now, we see that there will be an import bans of about 10 billion euros worth of imports from Russia, and another 10 billion euros of exports going to Russia. The key takeaway, of course, is coal. From what I understand, understand, buyers will be given 3 months to wind down coal contracts signed with Russia, and after that they have to exit the position and they won't be able to sign new ones. The other thing, of course, to me that is key here is that von der Leyen says there could be more sanctions to come. Now, in terms of the debate today from European officials, it is clear that there was no consensus for oil. At the start of the day, there had been perhaps conversations that oil could be included here. It is clear now, based on this announcement, that today was not the day, but nonetheless, I hear this conversation is ongoing and some countries will continue to push so that we do see also bans on Russian oil going into the European Union.
AMH is the first step. It's a small one into the energy arena. Coal. Do they go a step further to gas, to crude? Where's the US on this situation at the moment?
Well, there are some European countries, Jonathan, that are already there. Take Lithuania, very tiny, but they went that step further unilaterally, not altogether as the European Union. The United States already cut off Russian imports, but of oil, gas, and petrochemical products from Russia. But the issue is that the United States has that luxury of doing that. They are not reliant on Russia the same way Europe is, and Europe just isn't there yet, isn't ready. But we should note, and I think Javier Blas, Bloomberg opinion writer, of course, he was the former chief correspondent for energy for Bloomberg News, put it really well on Twitter. He says this breaks the energy taboo. If today is coal, what are we looking at a month down the line? Potentially, you're going to have more countries unilaterally, like Lithuania, coming out and saying we will no longer accept Russian oil and gas.
Anne-Marie, down in DC, thank you. Maria Tadeo in Brussels. Breaking the energy taboo. Kate Moore, can you weigh in on this? Where we are with energy equities, production in, say, Russia, what it means for the European situation, and how you're playing this story. And I know that's an unfortunate phrasing of mine, so forgive me for that, but I'm just thinking about how you might be pulling back from energy given the rally we've already seen.
Yeah, we're actually not pulling back from energy at this point. You know, over the last 3 years, we have been mostly underweight and had pretty low allocations to the sector. But of course, over the last 6 to 8 months, we had been increasing our exposure, and we're at the highest weight we've had in the last 3 years. We're not looking to reduce despite the phenomenal run, because what initially inspired us to add to energy equities had been the supply-demand balance and how much sort of traditional resource was going to be needed in order to make it through the energy transition. That story is still intact. And of course, we have additional fuel on the fire from this conflict in the Ukraine. So we don't see the energy story getting better in the near term. Of course, we would change our view if we heard from a lot of energy companies they were going to start pumping a tremendous amount. But that's not the story we're hearing at all. The capital discipline is very much in play across most of the major energy equities. The second part of your question, though, John, was how are we investing and how are we playing here, in addition to the energy companies explicitly? We're also looking at commodities that are energy intensive, like aluminum, for example. That has been a core overweight in the thematic portfolio for the better part of 5 months. Some of that was weather related going into the winter, but now with reduced energy, higher energy prices and reduced energy from Russia, I think this is going to be an enduring story. So we're looking not just at energy equities, but other resources that benefit from higher prices and reduced capacity coming out of Russia.
Dan Skelly, can I throw that question at you as well, just in terms of the run we've seen in energy equities and where you and the team are at the moment on that story?
Sure, John. We've had a positive bias towards the sector for some time and continue to. Look, hopefully we're moving more towards some type of ceasefire or broader negotiation in Ukraine. And so you may not see that same parabolic move up that we've seen in the last several weeks, but there's still reasons to be long the space here. So number one, historically, as we start to dust off our late cycle playbook, it's been a space that's worked well within the latter phases of the late cycle, number one. Number two, when I think about Kate's point, look, we had dramatic capital pullback from the U.S. domestic sphere in the years leading up into COVID, and certainly the Russia-Ukraine supply issues have only made that more exacerbated. And then thirdly, look, in a world where volatility is going to remain elevated and where total returns at the index level are going to remain more muted, certainly versus the last 3 years, you're clipping a pretty positive dividend yield. I would just highlight it's the highest yielding sector in the S&P, yielding over 3%.
Greg Peters, just a final word from you on the credit side. of things. Of course, the energy picture has been very supportive of what's happened in high yield over the last several months, given the sector tilt, the mix in high yield. Have you changed your views on that in the last month or so?
No, Jonathan, we're actually very constructive. We remain constructive both on crude and nat gas. So I think that story continues. Just the worry ultimately is that the high price effect and what that means for the economy writ large, right? And for the energy sector. And so, you know, the old adage of, you know, the cure for high prices is something to watch out for. But at this point, we're still quite constructive on the sector.
Greg Peters, Dan Skelly, Kate Moore, staying with us into the opening bound. More still to come on Twitter. Your morning calls, and later, Elon Musk goes onto the Twitter board, fueling another rally ahead of the opening bound. That stock is up over the last couple of days by more than 27%. From New York City this morning, good morning. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Minutes away from the opening bell. Equities just a little bit softer, down 0.25% on the S&P, on the Nasdaq down 0.33%. The equity story not doing much, but in the bond market we are doing something. The yield curve through much of this morning a bit steeper. Your 10-year up 6 basis points, your 2-year up only 3, and right now at least just about the 2-year trading just about above a 10-year yield, but there's nothing in it. We're basically back to zero. That's the bond market picture. The story for Twitter, there is nothing passive about the stake of Elon Musk. He's getting a seat on the board. That stock is up again by almost 9%, up 8.9% in the pre-market going into the opening bout. That's the price action this morning. Let's get you some morning calls. First up with Goldman Sachs, downgrading First Solar to underperform, highlighting mounting headwinds, including rising prices. That stock is down by 3.64% to $80.90. Next up, Wedbush, downgrading Starbucks to neutral, $91 price target, seeing a lack of catalyst for the foreseeable future. That stock is down to $86.53 and negative 1.77%, now 1.63. Going into the opening bout. Your third and final call is MKM Partners, downgrading Twitter to neutral, $49 price target, pointing to a fairly balanced risk-reward following Monday's 27% rally. Well, here's another pop, up by 8.73%, close to 9 percentage points higher going into the opening bout at 54.40. Up next, Twitter, running for a second day, naming Elon Musk to its board of directors. That is up next.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. It holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
On the year now, year to date, the S&P down about 3.9% on the S&P 500. This morning on the session, we come back a little bit, down 0.25% on the S&P. On the Nasdaq right now, down 59, negative 0.4%. The opening bell in New York City about to ring. There it is. Switch on the board and get to the bond market. Yields are higher on a 10-year, much higher in fact, by 5 basis points. We're back away from session highs though. Your 10-year, 245, 244. 49 to be precise. In the FX market, the euro weaker by 0.1%. Euro dollar sub 110, 109.60. Interesting moves in the Aussie. The RBA getting very close to a rate hike, it seems, dropping the word patient. Nothing patient about this Federal Reserve. They're ready to go 50 basis points, seemingly. Mike McKee coming up with Esther George of the Kansas City Fed in about 30 minutes, live on TV and radio. Looking forward to that one. Crude is up 0.7%, just short of 104. There we go, a 104 handle on WTI. About 30 seconds into the session, energy stocks advanced by 0.4%. The S&P down about 0.2%. Financials on the back foot, negative 0.4%. Early days with your movers. Here's Abby.
John, well, taking a look at all stocks other than Twitter, saving that for you and Ed Ludlow. Let's start out with the shares of Peabody, the coal company. It is popping to a 13. It's popping higher as coal pops to a 13-year high, above $100 a ton for the first time since 2008. This, of course, on the possible European ban of Russian coal. The EU proposing a ban on Russian coal imports, again, helping out Peabody and other coal companies. Mosaic, the fertilizer company, up 1.5%. This, of course, on another potential ban. The EU will place a cap on the import of potash. This is a material used in fertilizers and is widely purchased from Belarus. Other fertilizer companies, not surprisingly, are also bouncing higher. Carnival up 5.6%, rallying as the company is saying it had its best week ever, busiest week ever, even pre-COVID. That clearly signals some end to the pandemic, at least right now. And Moderna, not surprisingly, down 3.2%. This as both the African Europe Union and COVAX have declined the ability to buy more Moderna vaccines, again, on the idea that the pandemic is coming to an end, at least right now, John.
Abby, thank you. You teed it up for us. Let's take a look. Twitter in early trading is up by more than 8%, up 8.63%. This is Elon Musk is named to the board of directors. Another day of gains. The former CEO, Jack Dorsey, tweeting his approval, saying the following: I'm really happy Elon is joining the Twitter board. He cares deeply about our world and Twitter's role in it. Bloomberg's Ed Ludlow joins us now from San Francisco for more. Morning, Ed.
Good morning, John. Up 8.6%, that two-day jump of more than 35%. It's the biggest two-day jump on record for Twitter. Shares trading at their highest level since November. What a turnaround story for a company that sort of languished at the bottom of the pile of social media stocks, apart from Meta, the parent company of Facebook. The terms are very clear. Elon Musk joins the board as a Class 2 director. He can only hold up to 14.9% in terms of a stake during his term as director and 90 days thereafter. And there was some interesting stipulation in the letter from Twitter CEO Parag Agrawal to Elon Musk dated April 4th. So you imagine last night that he can't go above that 14.9% using swaps or derivatives. Interesting, because Elon Musk stepped down from the board of Endeavor in March, which is effective as of June, March 17th, effective as of June. Interesting timing, John. So now we ask the question, what happens? You know, Elon Musk replied to Agrawal's tweet saying he's looking forward to working with him to effecting meaningful change on the Twitter platform. Parag Agrawal, the CEO of Twitter, saying that Elon Musk is exactly what the company needs, which is interesting. What does the company need, John? Because if you look at the share price versus the average analyst 12-month price target, we've got some catching up to do, and you do wonder how many consecutive days to come street analysts will look at their price targets and think, how do we model this? How do you model the Elon Musk effect? You see the white line is the share price surging above the 12-month average price target. Interesting one, isn't it?
Ed, can we talk about freedom of speech? I think the media and the user base obsessed with things like the edit button. We can come to that at another point. But freedom of speech is a big issue for Elon Musk, and I wonder how he's looking to reshape this organization.
Right, so let's go back to the facts. March 25th, he tweets that poll asking his users if the Twitter platform upholds the principle of free speech. The overwhelming majority of respondents said no. We found out on Monday from the SEC filing that he already held the stake, 9.2% by that point. Then you go back to November, December of 2021, when Jack Dorsey stepped down as Twitter CEO. Parag Agrawal was appointed, and Elon Musk tweeted a meme which depicted Agrawal as Joseph Stalin pushing his then former head of security into a river. And at the time, many took that to mean not only that Elon Musk had a problem with Agrawal, but that he had an ideological difference with him around content moderation on the platform. Well, Agrawal was moved pretty quickly, and if you listen to Cathie Wood yesterday, all of these street analysts we had on the show, they at least said even if he didn't become an activist investor, he was sending a shot across the bow of Agrawal, who's acted within 24 hours. It's been astonishing, John.
Ed, when you speak to people connected with this company, I wonder how hostile this might be. Dan Ives of Wedbush said this morning. Musk joining the Twitter board is a key signal that Twitter is embracing Musk rather than a more hostile situation. You've been going over the work from Dan Ives of Wedbush, not just today, but yesterday too. Do you think this remains the way it is? Less hostile, or do you think it's bound to become more hostile, given we know he has a radically different view on what he thinks should be done here?
Yeah, I would note that a lot of analysts were very careful with the language they used, right, John? There's a difference between the word change and the word control. Whether you're trying to affect change in a company or affect control or change to the company's operations are two different things. And, you know, Elon Musk has Elon Musk factor. He has more than 80 million followers on Twitter. He's arguably the most prominent person on the platform right now, and he leads a vast following who hang on his every word. We know that from the behavior of retail investors for Tesla stock who will act based on what he says on the platform. So, you know, most of the street analysts seem to look at this and say, is he trying to make a real activist play like Elliott did to affect management change? We don't know what his rationale is. We don't know his psychology. But he may just be trying to influence the platform because it's one that he's so prominent on.
Ed, thank you. Stay close. No doubt we'll have more news on this in the days, hours, weeks, minutes, who knows, still to come. Ed Ludlow on the West Coast. Twitter up by a little more than 7%. Deutsche Bank and Matt Lazzetti. Here's one for you. Matt Lazzetti just shot me an email moments ago. Here's the quote from him. I'll read it out for you. We see the Fed's tightening beginning to materially slow growth in the second half of 2023. He goes on to say, our baseline forecast has negative quarters for growth in Q4 23 and Q1 24, consistent with a recession during that time. That right there from Deutsche Bank is a recession call. Kate Moore, recession calls are very hard to call and very difficult to know what to do with. I mean, if I can guarantee you that outcome at the end of 23, the start of 24, can you do anything with that, Kate?
Well, I mean, I think it really depends on your time horizon, John. I mean, if we potentially have a decline in growth by the end of 2023. And let's just say that is like 7 quarters away at this point. I don't want to be out of risk assets in the near term. And by the way, you know, there are some companies, and I would say particularly technology companies and technology-enabled companies, that have strong secular growth tailwinds, or actually we're going to see more spend, you know, directed their ways. Companies that offer platforms and services that allow companies to become more efficient, reduce their labor dependency. And regardless of what GDP prints, these companies are going to be incredibly important for most industries. So I don't want to lean out of the equity market in the near term with this prospect of slower growth or perhaps negative growth by the end of next year. And in the near term, I also want to really take a look at the technology companies that have been derated since November, but who have very strong prospects over the medium term. So, you know, I heard Dan say earlier that, you know, he was a little bit more cautious on overall equity risk. I think equities are still the best returning asset class over the course of 2022, even if we've had to take down our return assumptions meaningfully since 3 or 4 months ago.
Dan, your name was mentioned. I'll give it a chance to respond.
Yeah, a couple of comments. So first, I think the jobs market and the revisions we saw over the last week or so, you know, typically the jobs market gives you a lead time of at least 4 quarters in advance. So we are certainly not seeing recession risk this year. Look, if the Fed goes ahead with all this tightening and we have more inflationary pressures as a function of Ukraine, is that going to result in a slowdown, certainly in 2023? We think so, right? Maybe not a recession, but a more material slowdown. And against that backdrop, I would concur with some of Kate's thematic convictions. In our equity models, we've been buying some of the digital transformation plays in the last several months. We've been buying names like Rockwell Automation, Accenture, which is a play on digital transformation in every industry, SBAC, which is a tower play, connectivity and 5G. So look, either the Fed goes ahead with all the Fed tightening and it leads to more slowdown, which augurs for having some growth names in the portfolio, which get a bid in a lower growth environment, or the Fed front loads it in the next several months and then pulls back a bit. And in that scenario, you actually like some of the growth names as well, because that would imply a cap on where rates go.
Dan, what is it about the construction of the S&P 500 at the index level that you really don't like? I get that you've got picks elsewhere, but what is it about the index that you just don't like?
On this interest rate level at 2.5 on a 10-year, at 250 on equity risk premium, we're seeing very rich valuations. We're in the top decile of valuations at 19.5 times forward of the last, call it 30 or 40 years. So we are rich, certainly. The dominant part of the market is that mega cap FANG, internet technology world, which has been kind of the tech theme of 2000 to 2016. As I just mentioned, we like certain tech themes, but we just wouldn't be in the mega cap space. We'd be a little bit further down the cap curve. The reality is once you get that big, as we all know, you are certainly more in the crosshairs of governments globally. Okay, and so not only do you have law of large numbers as a headwind, you have some regulatory headwinds as well on the horizon.
Greg, I wanted to give you the chance to respond to that Deutsche Bank piece. And for those just tuning in, I go over the quote from Matt Lazzetti and the economics team at Deutsche Bank again. We see the Fed's tightening beginning to materially slow growth in the second half of 23. Their baseline forecast is now for 2 negative quarters of growth, Q4 23, Q1 24, consistent with the recession during that time. Now, Greg, I'll repeat the question I asked of Kate. How useful is a call like that? If I can guarantee you that, how would you position for it at the moment today?
Guaranteed, Jonathan, huh? I mean, it's not so binary, right? So it's about risk reward and scaling back. And so just because you have that as a kind of a terminal concern doesn't mean you need to adjust, you know, on or off today. But I do think kind of what's based in the market and what's in the price does mean that you should be scaling back because the risk factor is higher. And so as you mentioned, it's really hard to forecast a recession, incredibly difficult. Only inflation is more difficult in my mind. So the risk is out there, and I think you have to start de-risking your portfolio in advance. Whether that recession comes about in the second half of next year or not, risk reward is still against you.
When are you a buyer of the long bond, Greg? Are we there already?
We're getting close. I mean, the war in the Ukraine has really changed the inflation dynamic. So we were, looking for the same kind of mechanical, issues that were described before. That, I think, is really pushed out. So I think it's too soon, but you are creating value. And so we're thinking of it as a sequencing. So the risk side, that door is closing, and the duration side, that door is opening. And it's just a matter of not getting trapped in between both doors.
And just to be clear, I can't guarantee anyone anything. Greg Peters, Kane Moore, Dan Skelly, to the three of you, thank you guys, really appreciate it. Coming up on the programme, the EU proposing a ban on Russian coal.
We must step up pressure against Russia, and we must step up our support for Ukraine.
That conversation up next.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
European Commission is already preparing a next sanctions package, and I hope that member states will be able to decide on ambitious next steps as regarding the sanctions. So we must step up pressure against Russia, and we must step up our support for Ukraine.
The EU proposing a ban on Russian coal and exploring the idea of doing something more, perhaps on gas and on crude as well. The United States preventing Russia from paying debt through US banks, turning up the pressure and forcing Moscow to find another way around. Damien Sassa of Bloomberg Intelligence joins us now for more. Damien, talk to me about what's been happening, how they've been able to pay some of their debt obligations and what's about to happen perhaps in the coming days and weeks?
Well, it hasn't been easy. I mean, they just had a $2 billion principal payment that was due on the 4th of April. What they were able to do was convince 75% of their creditors to take rubles instead of dollars for that debt. But the remaining 25%, $500 million to be exact, Jonathan, that's still held up with JP Morgan, you know, so they have yet to make payment on that. And today's news that, you know, U.S. banks won't be processing for the Russian sovereign is going to make things that much more challenging. So forget about the May 25th deadline for, you know, receiving coupon payments. At this point, it's a matter of, can Russia actually make payments to its creditors logistically? And so that's where the focus is today. And really what this does is puts the onus on Russian reserves. We know that Russian reserves peaked in February at $640 billion. It's now down to $600 billion as of the 25th of March. Of that, $300 billion is frozen, Jonathan. That leaves, what, $200 billion. 130 of that is gold. Another 65 billion is China. Go figure, you know where they're going for their liquidity.
Damien, you used the phrase there, you said logistically, and that's the conversation that you and I have been having for weeks now. It's not been about ability or willingness for that matter. Can they get the money from point A to point B, even if they've got the money and they want to send it? Can we talk a little bit about ability? What do we know about their ability to pay their debts, given what's about to happen to their economy?
Well, it seems that they have enough funds, certainly to get to the May 25th D-date that the U.S. government's kind of placed on, you know, creditors to take in money. But, you know, it's going to happen a lot sooner than that. In fact, the Credit Derivatives Determinations Committee has to make a ruling on whether Russian railways actually defaulted, whether or not that was a credit event. They missed their 10-day grace period. They had money that was due on the 25th. So that could set off a whole range of different things, Jonathan. Remember, there's a lot of credit default swaps out there tied to Russian corporates, to the Russian sovereign itself, 41 billion to be exact. So yeah, there's money that needs to change hands, and once that process starts, forget about it. All bets go out the door.
Damien Sessa, thank you, sir. As always, on the latest with the Russian debt situation. Here we are on sanctions with the EU proposing a ban on Russian coal. How that will work in the future we can talk about in a moment, but also exploring additional sanctions, including on oil imports as well. That from Ursula von der Leyen of the European Commission this morning. Bloomberg's Will Kennedy joins us now for more. Will, talk to me about this. What's being done on the coal front and what could happen in the future on oil? And put it all together for us too. How important this step has been for the Europeans today to go into the energy area on sanctions?
That's exactly right. In a sense, Rubicon looks like it's about to be crossed, because until now, energy had been off the sanctions table. We know that there are a lot of EU members, led by Germany, who are very wary about sanctions on energy because they think it will have such a detrimental effect on their economies. But pressure is built, and now it looks like it's about to happen. They're going to start with coal, and coal, although it doesn't have quite the same prominence as oil and gas in the conversation, it's significant. I mean, Russia is the biggest supplier of coal to the EU. The EU is by far the biggest. It buys about half of Russia's coal, so it will make a difference, and it will have big costs for the EU. As you know, John, the coal market globally is already very tight. We saw record prices even before the war. And while there are other suppliers, South Africa, Indonesia, South America, they don't have much coal to spare. So it will add to the energy crunch in Europe. And it shows a willingness to go to energy. Now, oil is, of course, is the big one. It's now part of the conversation. I don't think it's for this sanctions round necessarily, but the fact that it's on the table, I think, is also very significant.
Will, could you help us understand the numbers, the level of dependence that the Europeans have on Russian crude, and how much Russian oil has actually come offline over the last few months?
So it's one of the biggest suppliers of crude oil into Europe, and not just crude oil. I think it's very important for people to understand that it supplies a huge amount of refined products, principally diesel. I mean, countries like the UK were getting a third of their diesel from Russia before the war, and that's a pinch point. But for Germany, it has real impact because Germany is at the end of the Druzhba pipeline, which is an oil pipeline bringing more than 1 million barrels a day of oil into Europe. The concern for Germany is if they don't have that oil, Berlin will find it very hard to get any fuel at all. The refinery there won't be able to produce gasoline or diesel, and they need time to work on logistical alternatives. I think the Germans will say, even if this is the direction of travel they want to get to, they cannot do it overnight. The logistical challenges are very great. It would cause far too much disruption to the German economy. Now, you can argue about what the price worth paying to achieve this is, but that's the German perspective. And I think they have a particular vulnerability when it comes to oil because of their use of pipeline oil from Russia.
The response that I've heard, Will, is that they've had 8 years. They had since 2014 over Crimea, and they just didn't set the ball in motion. Well, thank you, as always, Will Kennedy. That's the situation right now. We've got to confront that, not the history, I guess, and go over things in hindsight. Crude up more than 1% on Brent to 108.62 on WTI. Similar move, 104.33 with a sector price action. Here's Abby.
John, it's pretty interesting. And sticking with the coal story, the top sector on the day, utilities up more than 1%, up 1.3%. Making it interesting, of course, is the fact that yields are higher. So this dividend-rich sector should be down, but it has everything to do with coal soaring. Not far behind utilities. Energy up 1.2% with oil. Yesterday's top sectors, the worst sectors, communication services, discretionary, and tech. Of course, all those mega cap sectors down just a little bit today, notwithstanding Twitter, of course, soaring. Down for a 5th day in a row, though, is the transports index, the worst 5 days, I believe, going back to 2021. And this, of course, John, as there are reports, one in particular out by FreightWaves, saying that there's a recession of some sort upon the market load of trucks. So seeing some weakness there, John.
Put it together with the home builders through much of this year. Some big weakness there. The home builders down 28% on the S&P. Abby, thank you. Coming up, your trading diary, the events you need to look for, and why the Federal Reserve minutes are worth reading, perhaps this time around. From New York, this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Five minutes into the session, equities on the S&P unchanged. The sector composition of the move, the breakdown though, information technology struggling. The Nasdaq down about 0.7%. One single name, Twitter, is not struggling. That move right there up by more than 5% as Elon Musk gets a seat on the board of directors. Guy Johnson will pick up and run with that story in about 5 minutes' time. Your trading diary looks like this. President Zelensky addressing the UN Security Council at the top of the hour. Fed speak throughout the day. Brainerd Daly, Williams, all on the docket. Esther George coming up with Mike McKee. Don't miss that. Don't miss the president discussing healthcare at 1:30 this afternoon. Fed minutes come up tomorrow. Chairman Powell said, look for that for details of balance sheet reduction. We will do just that. Oil executives on Capitol Hill coming up as well. And finally, rounding out Thursday with some jobless claims on Thursday morning. From New York, this is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi-Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees. But for people who couldn't afford the money, he would just represent them pro bono.
The alliance, per se, is to build up pressure on Pepsi. And so you see people marching the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Benegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Benegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Benegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Weinergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there, like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is, when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small and space is really big. And then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities in the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't. And the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech and write-up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just attacked that video and were like, you explain things so much better than my boyfriend or my professor, or I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwits, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind. but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed Harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing,